Former Fed Governor Randy Kroszner is with us this morning here at Post 9 talking about the economic outlook, of course, PCE and some other numbers on tap later on this week. Randy, great to have you in. Welcome.
Great to be here.
We went through a lot of key lines on the Powell speech on Friday.
Yep.
Downside risk to the labor market, reasonable base case that tariffs are a one-off of sorts. Which was the most important to you?
Yeah, I think, remember he'd been saying wait and see. Well, they've waited, and now they haven't seen really much from the tariffs, and that's something I think a number of us have been talking about for a while, that it's much more likely to be a one-off. I mean, imports are only about 12% of U.S. GDP, so even if you raise tariffs significantly on them, that's not going to have that much of a price impact. And what we've learned over the last few months is this is going to be not all at once, but over time. And so I think they've waited, they've seen, and now they don't have to wait anymore to raise rates.
Right. Does that mean you think the biggest upside risk is that the jobs numbers are a little better than we thought for August, or that the inflation numbers continue to run hot?
Well, I think my guess is that we're still going to see a softening of the labor market, as we've seen with some of those labor market revisions. Now, I could be wrong, and some could be wrong that this is just a one-off. I mean, there's a big debate at the Fed. We'll obviously get some important information on Friday, but my guess is what we'll see is in some of the categories like furniture and others that are heavily impacted by imports, they'll move up a bit, and overall things will move up, but not that much.
You know, Chair Powell at the last press conference and the one before that basically said he tried to portray his position as pretty simple. We're farther away from our inflation target than we are from full employment. Therefore, we wait, we hold rates at a slightly restrictive level. Nothing has really changed in the numbers in that equation, but I guess he has confidence that Friday's PCE, based on the inputs, is not going to show a flare-up, and I guess he has to be attentive to the fact that unemployment might go up from here.
Yeah, I think that's what it is. Those revisions to the employment numbers, I think, really changed the Fed's forecasts. And you should be making your policy not based on the numbers today, which are always in the rearview mirror, but where things are going. And I think they've revised where they think the labor market is going. And so I think that's why they're a little more forward-leaning on interest rate cuts.
So a lot of discussion today about long-term unemployed. I think the share of unemployed that have been out of work for 15 weeks is we're approaching half of the unemployed base.
Yep.
Right. That's a big deal.
Yeah. So I think that says that there's sort of a core of people who find it very difficult to find a job, and we're seeing fewer jobs being created, and so there's much more of a concern that the job market could turn south and continue to turn south.
When you look at unemployment rates for kids, essentially teenagers, but also early 20s,
sure.
Do you think technology is creeping into that space?
It's really hard to tell.
Yeah.
I get all different kinds of reports. So far, it's all anecdotal. Some is like, oh, wow, coding is taking off. Everybody can be a coder now. Other people are saying, oh, well, you only need one coder to do the job of 3 or 4. So, and there are a lot of new opportunities that are coming up. We haven't really seen the impact yet.
What's your view on the Fed's balance sheet at this point in terms of how much and how quickly it should be reduced, if at all?
So I think, obviously they're in the path to reducing the balance sheet. They haven't articulated exactly where they're going to stop. I think so far they haven't seen any disruptions in the markets. I mean, they're worried about the potential for some sort of taper tantrum, and so far they haven't seen it. So I think they're going to continue to go basically on the pace that they've been going.
And you think that's appropriate?
It seems reasonable to continue to pull back a bit on that, but as the markets slow and the economy slows, they may slow that down.